Hi, everybody, and welcome to the weekly market recap, a small section outlining the key events that happened throughout this week. And my name is Andreas Aralambus. I'm a senior market research analyst at Bullwaves. And without further ado, let's get started. So, the first slide of our presentation outlines the 6 stories that moved markets this week. So, we have Wall Street hitting fresh record highs, Palantir delivering a blowout earnings quarter. A straight up Hormuz-driven oil spike once again entered the picture. SpaceX has rebounded after plunging to their quote-unquote all-time lows, and a rare rescue of the Japanese yen, all coming up throughout this week. And the week is not yet over because we have non-farm payrolls reported later today. So a lot of things to cover. Let's dive in right. So first topic is a rare Japanese yen intervention, a joint intervention between the United States and the Japanese finance ministry, more specifically after the Japanese yen has fallen to this lowest level in over 40 years, and the fact that the United States intervened alongside with the Japanese finance ministry to save this kind of depressed currency due to the fact that we see non-ending carry trades from international investors says a lot about the state of the economy right now. So the U.S. Treasury yield, the U.S. Treasury, more specifically, has coordinated with the Japanese Finance Ministry. The reason why we continue to see this kind of weakness in the Japanese yen is primarily on the difference or the divergence of monetary policy outlooks between the Bank of Japan and the Federal Reserve. Federal Reserve has raised rates aggressively over the past few years now, and they keep them elevated at the 3.5 to 3.75% level, whereas the Bank of Japan is actually on a 0.5% level when it comes to interest rates. So this kind of net interest differential is what gives rise to these carry trades, and that's why we continue to see this kind of prolonged yen weakness, and we expect it to continue up until the point the Bank of Japan normalizes their policy decisions or their monetary policy outlook. For the time being, is nowhere near the horizon. So the situation is definitely going to be monitored over the next few weeks and months to come. Yen weakness is expected to continue, at least from our point of view. So moving on to the next topic, we have Palantir's otherworldly quarter. So they top both EPS and revenue estimates. Their shares rose intraday by approximately close to 30%, so which is a severe number coming up from a company that was sidelined from a lot of big names such as Michael Burry, the contrarian, if you will like. And this was a company that was pushed to the sidelines due to the fact that they had an exuberant overvaluation, and this kind of share price is not guaranteeing or is not tied to reality and their what the company actually produces. Apparently, the company does continue to produce and attract more capital from sales from their unique products, we may say. And let's not forget that Alex Karp, CEO of the company of Palantir, has also taken shots against large LLMs or frontier lab models such as OpenAI and Anthropic earlier this week after the earnings announcement, because he said to them in a sense that, you know what, our clients value their privacy and their data sovereignty, and this obviously showed left their mark, if you will like, in the earnings report compared to the big frontier lab models, which are not as good, according to Cobb, when it goes to protecting the privacy rights of their own clients. Let's not forget that Palantir is one of the largest beneficiaries of US government contracts. So that says a lot. For the time being, this company is making a rebound and, again, is providing a solid ground underneath the overall AI trade. And hopefully it's going to continue this kind of rally in the near future. So moving on to Wall Street's record run, we saw S&P 500 and Dow Jones more specifically hitting fresh record highs earlier this week. Nasdaq was not there. Tech is actually in a make or break kind of cycle for the time being, even though we saw this kind of cyclicality outflows from tech moving on to other consumer stable companies. And that's why we saw S&P 500 and Dow Jones crossing into fresh record high territories, even though yesterday and earlier today we see some sort of a slight pullback from the record highs. Exuberance is and optimism is there. Amazon provided another solid earnings report that kind of stabilized and allowed these kind of markets to rally from here onwards. But yeah, we'll see how long this kind of rally continues. And let's not forget, we have NFP today. So next topic is SpaceX. So Elon Musk's airspace and space travel kind of company that IPO late last month has reached earlier this week its lowest price ever, which was somewhere around the $109, $8 per share, and this came after a 14% plumb due to the fact that their earnings report fairly underwhelmed investors, we may say, leading to this kind of slump, which was the second worst day on record. And let's not forget, the record is not that long standing. They IPO'd last month. So the fact that we saw yesterday a rebound of 6% of these kind of shares of SpaceX is primarily due to the fact that approximately more than 900 million insider shares are now freely available and eligible to trade. And this is doubling, in a sense, the public float. And again, these kind of events are observed to yield this kind of results. That's why we saw this kind of pop. Nothing in regards to long-term future projections glimmering under the lights, if you will, like, in regards to SpaceX. But yeah, we'll see how much interest retail and institutional investors are going to pour into SpaceX, and whether this kind of trough form that they want 08 level is going to be persistent for the near future, or maybe we're going to break down below that. We'll see about this. Moving on to the next topic, and a topic we have discussed many, many times in the past: oil Hormuz tensions. At the start of the week, we saw this kind of hope that the situation or a ceasefire agreement has been reached, and prices of oil futures, more specifically Brent and WTI, plummeting or falling kind of sharply at the start of the session. And this kind of fall was not that long lasting, as midweek we saw this kind of attacks by the Yemeni Houthis and in the Red Sea on a Saudi Arabian tanker, has once again spiked up volatility and pushed energy prices higher to the $83 per barrel level, more specifically on crude. And again, these kind of tensions create this what roller coaster effect we have observed in regards to WTI and Brent futures, and we continue to expect things to go sour from here. Not sour, but at least being a mix-up of situations. Someone announcing we have a ceasefire, another one saying, you know what, we are an all-out war. So this is the theme we continue to expect to come through. And once again, maybe now we're going to shift our attention from the Strait of Hormuz to the Strait of Bab el Mandeb, which is the entry point if you're moving north, at least into the Red Sea. So maybe we're going to see much more incidences taking place from the Houthis, something to pay close attention to without a doubt. So lastly, let's move on to the final slide of the presentation for today, which is the non-farm payrolls report incoming later on today. And we have July's data. Economists are expecting for the US economy to have gained or created 85 to 100,000 new jobs in the month of July, up from these 57,000 we saw in June. And the unemployment rate is expected to stay still at the 4.2% level. Again, the pattern here remains the same: low hire, low fire, and an economy somewhat at an equilibrium and not accelerating. Maybe the ISM we saw earlier this week is going to distort the narrative around the growth part moving forward. We'll see about GDP readings next week. So let's recap the whole thing. Yes, this is important because relatively soon, next month, we're going to have the next Federal Reserve meeting where we're going to see Fed policymakers deciding on interest rates. Last month, we saw them standing still, not voting well, some voted for a hike, which was a dissent. Let's not forget that. But Fed policymakers kept rates steady at 3.5 to 3.75 level late last month. The odds for a rate hike are for the September meeting are currently at the 4.45% level. And we'll see whether these kind of odds are going to change drastically after this kind of report. Again, for the time being, low high, low fi is the default. Let's not make any predictions. Let's wait for the results and we'll do a cover story after this. For the time being, this has been the end of today's session, guys. Thanks for watching, and hopefully we're going to catch you up next week for another weekly market recap. Ciao, ciao. Bye-bye.